Don't shoot me, I'm just the economic storyteller. Will the US central bank actually cut interest rates, and should we sell BHP? I'm Peter Switzer.
And I'm Paul Rickard.
And we're mad about money. Okay, Paul, I continue to get harassed by all these people who want 40% house price falls, but I keep seeing that the economy, to me, looks like it's going to rebound in the second half of this year, and these people scoff at me, of course, but what do you think? Do you think we can get a rebound in the second half of this?
I think we can get something, Peter. I mean, you are, of course, the glass half full guy.
Stop rubbing it in.
And I'm the
You're
glass
on my side.
half empty guy. But look, yeah, I mean, I think there's a bit of a rebound. I think the news isn't as bad as it's been made out. I think we're in a bit of sort of a ABC, Fairfax media. They're short of any other stories. So let's talk doom and gloom.
Scare the pants off people.
Scare the pants. I mean, look, sure. I mean, the government need to do something. You've got the tax cuts, interest rates question mark, but they've been lowered.
There's two cuts. Anyway.
Two cuts. We've got some wages growth. I mean, I think one of the things that people forget about in all this story is the rural economy is still doing it pretty tough.
Yeah, the drought.
And that's a drag. You can't do anything about that. Maybe so that depends a little bit, but I don't think it's as bad as people are making out to be. I think it's just a little subdued, and some of these stimulus measures will help. So we're not going into recession, and so forget that. Yeah. Don't listen to the ABC nonsense on this at the moment. I mean, I can't believe just how negative our national broadcaster is.
Well, I love our ABC, and I do read Fairfax, but I do think you're right. They're excessively negative, and it's probably because the political story isn't there for them to rip into ScoMo at this point in time. Though they did bring up his religion. But it wasn't like...
Well, they're struggling. There's nothing to talk about. So they're now back to the economy and about the stock market and how the stock market and the bond market both could be right. I mean, the number of stories. Go to the ABC Online page, and they headline this stuff as news. It's not news, it's opinion, all right? Yeah.
And that's an opinion about opinion.
And in most cases, the opinion is damn wrong. Okay. So anyhow, I think the economy's not doing as bad as we think. Yeah. Let's hope that these measures actually have some support out there.
Yeah, well, one piece of news, and I will go accept that bell ring in a second, but labour costs rose for the fastest rate in 8 years. That's an interesting sign, isn't it, Paul?
Yeah, the trend has changed there. I mean, wages are ticking up a little bit, and so I think that's a positive. I mean, we've talked about the unemployment rate having come down, and the Reserve Bank says it could be a lot lower, but question mark about that, because we are starting to see some wages growth, and the wages growth that has happened to date has been in the public sector. No. Now it's starting to come out in the private sector. So there are some encouraging signs out there.
Let's hope the Westpac consumer confidence number is a good one today. Okay, let's go to the US central bank. Poor old Jerome Powell. He's in a headlock with Donald Trump. Cut rates.
Well, he's going to be speaking to Congress, I think Congress tonight and Senate tomorrow night, so big news there. The market is just watching every word he says. You're right, he's in a headlock because Donald says he's got it wrong.
Yeah, he's a dope.
And he's
not as stupid as the UK ambassador, but he's a dope.
He's a dope, and he's reacted, and of course he's gone from being patient about it. The whole story in the US has changed, so now the market's saying, almost 100% chance of cutting rates on the 31st of July. Yeah. Some people are even talking about a 0.5% cut. They've gone off that. Bond rates have ticked up the last couple of days. I don't know. I think my guess is he might just be going to be temper expectations a little bit, but I'm not sure they've ever quite wanted to reverse as quickly as they've made it out to be. But what do you think?
Well, I think what shocked everybody was that job number they got on Saturday, or our time Saturday. 224,000 jobs showed up in an economy that apparently was slowing down terribly, which then needed interest rate cuts. And so old Powell's probably saying, well, hang on. The only defence he could come up with is that unemployment numbers are a lagged indicator. So he could say, well, okay, that was driven by a better economy 6 months ago. I'm now more worried. I was thinking about 0.5% cut. We might give a 0.25% cut just to make sure things are well. And if he does that, it could actually sustain this US economic growth period longer than I would have thought.
It's been the most remarkable turnaround from last November, December, and everyone was saying 3 or 4 increases in the US to suddenly everyone talking about 3 or 4 decreases. I just don't think things change that quickly. So the market wants rates to fall, but I don't be surprised if the market's just a touch disappointed tonight with what Jerome has to say. But he's in the headlock, and who knows whether he's going to value his relationship or his job with Donald more strongly than the headlock. I don't know.
And the thing is I was happy to think that the US economy was growing so well, it didn't need a rate cut. If it gets a rate cut, it probably will be good for stocks and it'll be good for economic growth. But one day, it will breed inflation, higher interest rates, and a crash.
I think there is some worrying data coming out of the US a little bit. This tariff stuff is having a bigger impact than people are talking about. There was data out last night saying that it really is biting. Yeah. Remember, tariffs are a tax, and they actually they put the cost of goods up, so they make it more expensive to produce things, and so employers have got to deal with that cost increase suddenly. So tariffs aren't any great panacea, as Donald likes to make out. They're actually a negative for for things like industrial production. So there's actually stories coming out that's actually starting to bite. So it could be Donald shooting himself a little bit in the foot here, but I'm not sure Donald's going to say that.
No, reporting season, which starts the next week, will show everything.
Yeah, I think interest rate stuff goes for reporting season, and that the market's going to start to focus on that. So I'm just a bit wary about the US at the moment.
Okay. Should we sell BHP, Paul?
Look, I think this is profit-taking area. I've said that now for a few months, Peter. And what I didn't understand when I first thought this some months ago was that the production disruption in Brazil caused by that tragic accident with Vale in January was going to have such an impact.
And for such a long time.
And that's why BHP is where it is. It's why Fortescue is where it is. It's why Rio is where it is. So,
and it's great for the budget bottom line.
It's great for the budget bottom line. Now, it doesn't show any quick signs of unravelling, and so that's why we've now got iron ore prices around $120 US a tonne. We've got the Chinese government talking about how they... I won't say the word manipulate the price down, but how they actually, they're worried about the impact it's going to have on steel producers. Look, I think it's in profit-taking territory, but probably time's on your side here. I mean, so I'm not in any rush, Peter, but I sold some around $40, and if it goes up again, I'll sell some more. I think this is in sell territory. Resources stocks are either long or you're short, basically. This is the sort of time to be edging out, but I'm not calling the end of the iron ore boom over yet, because I just don't know any more than the next guy on the street.
Yeah, I haven't had the guts to sell, Paul, at this point in time, but I think you're right. I think the upside is a lot less than what the potential downside would be. So if you made really good money and you're in 50-50 land, I would be doing what Paul's doing, which I haven't done yet, but I think selling a bit now, and maybe if it goes a bit higher, sell a bit more, because you've done well.
And maybe you do it through the stocks that are a little more iron ore dependent. So BHP is only about 40% of its profits coming out of iron ore. Rio's about almost 60%.
Correct.
Fortescue's close to now 100%. So they're arguably a little more exposed to a change in the iron ore price than BHP.
Okay, so that's what we're going to do with BHP. It's a real gamble, isn't it, Paul?
This is where he needs to ring the bell, Peter, and give you the wind-off cue, and let's get out of here, shall we?
Well, I'm Peter Switzer.
I'm Paul Rickard.
And we're mad about money.